All right. So, as I mentioned last time, we are in a little module of AHA sessions. This one's called My Golden Seas, or Tony's Golden Seas. And this came about because I was developing, I turned my trading career around. I was struggling for a long time. I managed to turn things around, and I had people that I was close to in trading wanted to know what I did. And so I started trying to help them, ended up deciding that the help I was giving them was during trading time, and it was actually kind of hard for me to help them and trade at the same time. So I created a, uh, a program that we ended up calling the Trader RX program. And during that program, I kind of had to think back on what are the things that I remember, because sometimes you have ahas. That's the name of this whole this series of videos. And sometimes you have ahas, but you don't necessarily realize it at the time. At the time, something might seem like a good idea, seem like something you might try. Something may happen that you didn't actually realize happened. You may have these ahas. Some of them are like lightning bolts coming down, and they're very obvious. And as I found out, many more of them were really only recognizable in hindsight. And I probably wouldn't have done this exercise, this hindsight exercise, meaning going back and thinking about what were the things that got me to change the way I was approaching trading. So I was fortunate enough to be doing this and developing this program for other traders and thinking about this stuff. And I came up with these qualities that you need to have, earn, develop in order to be a good trader. Qualities that I didn't realize at the time. See, most of the time, I just wanted to know when to push the button. And that was not working. For 7 years, that was not working. So I came up with these qualities that I realized that I had earned or gotten one way or another. So clear the clutter was one of them. Consistency, conditioning, confidence, capital preservation, and challenging conventional wisdom. Okay, so those were the things that really got me headed in the right direction. So last week we talked about clear the clutter. So this week, obviously, we're going to talk about being consistent. Okay. So I always like to put up the definition here, so we're all on the same page as to what I'm talking about when I say consistent. Okay. Always acting or behaving in the same way. Okay, of the same quality. Continue to happen or develop in the same way. Okay? This is what I'm talking about when I'm talking about consistency. Okay, now I stopped trading for money a long time ago. My mission when I trade is to consistently execute my trade plan the same way every single day. Okay? Has nothing to do with money. So if I told somebody, that was new to trading, I trade for consistency, what do you suppose their first assumption is going to be? First timers that are here, people that are here that have never been here before, they're going to say wins. Money, exactly. Right? How much money per day? That's, to them, when you talk about consistency, if I just throw out the word consistency as it relates to trading, people are going to make the assumption, they're going to extrapolate out consistently winning trader. Consistently making money. Okay? So that's why I pulled up this definition, is make sure we're all on the same page with the definition of consistent. Okay? So most people believe that money's the main point of being consistent, and ultimately that's true. But money is not what you're trying to become consistent at. Money is the net result of consistency. Okay, many of us have done very well, making money for a while, and then it stops, and then it starts again, and then it stops. Okay, so consistency is not just about income and earning money. Okay, there are a lot of other things that you need to be consistent at. You need to focus on just one thing. You need to consistently focus. Those of you that were in the trade room today, we had 4 of the indexes all taking a major push all at one time. 3 of those 4 had an indicator that said, okay, we're not going to trade this. The 4th one had an indicator that said, it's pretty close to not trading it, but it still qualifies. Now, for most of us, we'd say, oh, well, if the other 3 say it, then I'm just not going to trade the 4th one. And that might seem logical, because the conditions in the market were such that the volatility may have been too extreme. But I don't have anywhere in my trade plan that says that I should do that. So I didn't have the option. So my focus was on my rules of my trade plan and executing that trade plan exactly how it's written. Now, if I want to not trade that trade because of all the other conditions going on in the other instruments, then I need to write that in the trade plan and remain consistent, okay? Many traders tend to dilute their focus because they don't have confidence in their edge. We'll talk about that next week. So this is being a consistent style of trader. Okay, I remember when I was a struggling trader, and I was trying to do everything I could to just win a trade, and I was learning everything I could out there, and I was trying everything there was out there. I was trying to trade like a longer term trader, maybe like an investor. Then I would try swing trading. I tried trend trading. I tried scalping. I ended up with second brain trading. I would just do all kinds of different stuff, and but never really focus on one or the other. I would try one for a while. Here's what I would do. So say I was focusing on, or I thought I was focusing on a particular style of trading. And while I was focusing on that, a setup from another style of trading I was looking at or thinking about or whatever looked like it was setting up. Suddenly, my focus would shift onto something that I didn't have any intentions of ever doing ever again, but there's the setup. Gee, I was working on it before. I should just try it. What the heck? I'm only a sim. I'm just simming. So what the heck? I'll just try it. So I found myself not only in the middle of a trading day changing styles. I would do it in the middle of each trade. Okay, I would enter a trade using one style of trading and exit using a different, because somewhere during the course of that trade, something looked like some piece of information popped up that said, oh, I remember this. There's a doji there. I should know that I should do something different here than what's in my rules. So I learned that in that other style, and I should apply it to this trade. So we've got to maintain consistency on the trading style, your trading schedule. Mike brought this up in the room today. Everybody was saying goodbye about 5 minutes early. Last week, Mike had to leave early for technical problems, and this week, and he missed a trade. Or was it yesterday? Yesterday. And he missed a trade. So now he's got in his trade plan, I trade every day until the trade room closes, period. That's it. Never leave. And so you've got to have a regular and consistent trading schedule. All right, this is your job, or you need to be approaching it like it's your job. Now, if you want to approach it like it's a hobby and just kind of do it whenever you have time, that's fine. Just adjust your expectations. Your approach to your trading session. This was one that became an integral part of that training that I told you I was building, called the Trader RX, that mentoring program. And approaching the trading session and how you approach it every day is very important. You don't show up in your pajamas and trade for a while and then start your day after you're finished trading. You've got to approach the session like this is your job. This is what you got up for. This is your day. The mindset is that you're getting up to go to work. And you do this every day. Right? So this is part of your approach to the trading session. I like to sit and just stare at the charts for the first 15 minutes before I even open my trading domes. I like to just watch. That 15 to 30 minutes kind of starts getting me in the right mindset. I stop thinking about whatever it was I was doing a few minutes ago, or thinking about, doing taxes or paying bills or doing accounting or doing emails or doing whatever it was, and just sit and kind of get your mind right. Or what about maybe reviewing your trade plan every single day before the trading session? Every single day. Okay? So you need to approach your session consistently. So, following rules based on your risk tolerance. Everybody has a little bit different reason for trading. Everybody has a little bit different tolerance for risk and how comfortable they are risking their own money, and how long they want to have it out in the markets, or how often they want to have it out in the market. So you got to base your rules around your current risk tolerance levels. And I say current because your risk tolerance can change over time as your confidence grows. Okay, but that is based on experience. It's not based on something that I can sell you or give you or tell you about. It's based on experience. That's where confidence comes from. We'll talk about that next week. So I suggest that many of you, after having listened to, we just did a series on plans, and you listened to me on the trade plan. A lot of you got excited. A lot of you got started on building it, and then life got in the way, didn't it? Never quite finished it. Never got to a point where you felt like, it was something you could use on a daily basis. You still got work to do on it, or you got stuck and you started this, well, I'll just do it later. Okay? You've got to have a plan for not just consistently trading your trade plan, but consistently working on your trade plan. Okay? And part of that is doing trade analysis consistently. All right? We want to study our trade results and do our trade analysis every single day. So the results, which you can see that they take care of themselves if you're consistent with the other things. So you certainly are looking for consistent results, but they're a byproduct of all the other things that you need to be consistent at first. Try to get good at trading before expecting to make any money at it. Become consistent first, and then the money just shows up, right? Anybody got any questions about consistency? So what most people think that you're working at is consistently making money. The truth is you need to consistently work at where your mind is, how you're approaching your job, what your risk tolerance levels are, working on your trade plan, working on practicing, working on your trade analysis. And then the results will take care of themselves. You don't have to work at consistent results as it relates to wins and losses and money. Those will take care of themselves. No, you can trade a rock star the way it's written in your plan each time. Yeah, you have to practice consistently, just like any other profession. And sports is the most obvious, right? So sports is these athletes, professional athletes, they have consistent practice schedules. They don't just do it whenever they feel like it. They have very consistent schedules to work at their profession. You'll notice that in companies, everybody's got a specific job description, and a lot of those job descriptions have to be done. A lot of those jobs have to be done in a certain way at a certain time, every single day. This is the same way to approach your trading. Consistently, the same time, the same way, the same jobs every single day. Not when you feel like it. Not when you have time. Not when you've put out all the other fires in your life and you look around and go, okay, I've got nothing else to do. Now I can focus on this thing I need to try to learn how to do. All right? All right, that's it. Everybody have a great rest of your day, and we'll see you tomorrow.